All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, May 28th. It's the first trading day of the week, but it did feel like a Monday today, but it is Tuesday. So let's go through the price action. Pretty nasty stuff all around. Well, maybe not all around, but a lot of things kind of succumbed to the pressure. I want to go over. This is the weekend newsletter that I write up over the weekend. Just kind of a trading plan to get you ready, and a blueprint as well as a watch list to get you ready for the week. And one of the things that I came up with that I wanted to stress was, what I'm watching. What, and this is again, I wrote about this on Sunday. What would be a good checklist for things to kind of cross off to kind of see that this I guess you could call it now a market correction. I was going to say dip, but I think you can start calling this more of a market correction from the highs. What are some of the things that I'm looking, kind of a checklist to that I'm looking for to see when I could start going back into the market and being a little bit more active. And I'm not completely out of the market. I've just been kind of trying to sell as much as I can into the strength. Obviously would have liked to sell a little bit more at 10 o'clock this morning, but you kind of get the idea. I had some things that really worked very well in the beginning of the day, and I took a lot of targets this morning, which I'm glad I did. As I said, would have liked to sell more in hindsight, but it is what it is. So one of the things that I talked about in last week's video was just distribution, right? And there's a very easy spreadsheet that I have built for this, and what you can kind of see is basically percentage change from the open, right? This just tells you, first of all, what areas are really getting hit, what areas are kind of safety, what areas are outperforming, but we want to know from the open, right, where buyers are coming into or where sellers are just pushing things down. They're still getting rid of things, right? So if you look at today's performance from the open, now we'll go over the charts as well, because that was number one on the list. But I just wanted to cover kind of just very easy to tell. And this was a note that I sent out, I think, right around like 1 o'clock today. And I said, well, things don't look great. We'll just kind of have to see how this afternoon shapes up. And it did not shape up. So, what what got hit? Well, basically everything in terms of the major indices. The Qs actually held up a little bit better, but SPYs finished down 1% from the open. The Dow finished down also 1% in IWM. So this to me, right, just looking at this very broadly, just tells me that the selling is not done. Whoever's unwinding, and mainly I would say institutions, they're not done yet, right? And this is something that we've been seeing, you know, pretty much for the last couple weeks, is just wherever we open, sellers are coming in and pushing this market around on the majority of the days. Maybe not every single day, but it seems like this is the trend that we got going on. Interesting, and I'm going to spend some time here, but the consumer staples, the utilities, these have been the hiding places in the market that have performed pretty well. They actually fell today. So let me go to this first, because sometimes I say I'll go back to it and I forget to go back to it. The home builders actually got hit too, and this had a lot of people, I think, scratching their heads, because there is normally a relationship here that is when bonds are rallying, right? When bonds rally, when TLT goes up, or when IEI or any of the usually the longer duration treasury bonds, when those rally, that means their yields are going down. And what happens is yield replacements like utilities, consumer staples, anything with high yields, they usually perform a little bit better, because that means that you could go into some places in the market, in the equity market, and get a better yield than what you're getting in the treasury market if you bought treasuries today, right? Now, that is the case some of the time, but when people are really spooked, when investors are really spooked, they don't want to hold any equities, regardless, even if they're utilities or consumer staples. So we saw this, right? I mean, this is something that should be somewhat fresh in your mind, right? If you bring up the utility ETF, And you look at what happened in December, it was kind of the same thing. You could not hide in defensives either. Back then, they rallied, they held up for the beginning of December up until about the 12th, 13th, somewhere, maybe the 17th was the big day that they got hit. And then they got brought, they got hit pretty hard too. So you could not hide in those in December. Maybe they fared a little bit better than everything else, but there's no there's no escape usually. When everything gets hit, and when the sellers do their final selling, usually everything kind of gets hit that hard. And remember, I did bring up a chart. If you want to look at a chart of TLT, just so that you have the comparison, I'll bring up another Bloomberg screen. If you look at TLT, that was certainly, the same thing, the same relationship held there, meaning TLT was still going up in December, and right, this was 12, call it 12, 13, 12. Yeah, that's when Treasuries took that last leg higher, and still utilities got hit. So again, these things, they people do look at valuation, and they realize that when things are getting too expensive, there's all different types of parties in the market. Just because I'm more of a technical person than a fundamental person doesn't mean the person who is fundamental isn't going to do the selling, right? So, I think that sorry, let me try that again. I think that trade may be running its course of going into high or low beta areas of the market. And that's something that I've been writing about for a couple of weeks. You could check my Twitter feed from this morning, where I talked about all the defensive positioning that's been going on. Well, I guess it's gotten to the point where it's gotten overcrowded, right? So those were the things that went down the most today. What hung in there today, believe it or not, that the Chinese internet's hung in there today. Emerging markets, some people were wondering, they're like, why are emerging markets up today? Well, because a lot of emerging markets are China. And what did China do overnight? China was up last night, so that wasn't really the problem. I think people are just at this point, U.S. investors, especially institutional investors, are getting tired of, at this point, holding riskier securities, meaning equities right now, and that's just how it works sometimes. The semis also got hit again today, down 1.5%. Besides AMD, what a star today, geez. And then it was some of the usual suspects. You could see energy names getting hit again. I mean, this group has really gotten hit. Let's look at XOP. That is breaking down, and again, we're starting to see more and more things break down. That was the last thing that I mentioned in the newsletter. I actually put that in the subject of the newsletter. Said, would really like to see at this point some of these things be checked off, right? Meaning buyers coming in, because things are deteriorating more. I've been using that word now for a couple weeks, but there is more and more deterioration that is going on. What's interesting is we're not seeing a complete breakdown in market breadth. Oops, that's not market breadth. Or if you want to look at the advanced decline line, it has certainly come in from the highs, but you're not anywhere compared to what we saw. So it's one of those things to me right now is I think you just have to weather the storm. Again, the video is is for information purposes only. I'm not giving out any recommendations or advice. I say that every video just to make sure but it's kind of me just giving my thoughts. But we're not seeing this major deterioration, right? This should be confirming, right? So if you bring up, we'll do this kind of, I know some people like to put a chart in a chart. But this was the move from December to October to December, right? This was confirming one another that the advanced decline line was falling at the same rate, right? These should be confirming. Notice that we've not really seen the breakdown, and it could be as well that we haven't really broken, but it does look like this is holding up slightly better. Right, and this is NYSE stocks that I'm looking at with the advanced decline line. So Well, that'll be something to keep your eye on. So that was we spent some time on, I think, number two and number three here on the list. What about number one, uh, the support levels that I've been outlining for the last couple weeks? Well, they're starting to go. Now, today's Tuesday, so the weekly level that I'm looking at, right? So weekly bar, we've got all week for this, but we are breaking into value. 28.1775. That's the level that I've been touting now for like the last 3 weeks. So we're going to have to close above that. So we've got some work to do. If not, and again, it's fine. This can get into value. Developing bar, which will be developing again weekly bars. So you've got Wednesday, Thursday, and Friday. So we could even push lower as long as we come back one day and close above here, right? I mean, that's a lot of wishful thinking at this point. Watching more and more things start to go down. So we'll see. Again, it's really going to depend on not so much the technicals, but buyers are going to have bigger buyers are going to have to come into this market and support it. And I did say riskier areas of the market are going to have to lead. So if you go back to what I was saying about low and minimum volatility, I've got two ETFs that I've been watching. So this is one thing that I think is a little bit positive, right? So this is SPLV. So Sam, Paul, Larry, Victor. Low volatility equities in the numerator and high beta in the denominator. So this was one sign of bottoming. This was on 1221. Now, of course, we didn't bottom until 1224, right? That was the low point. But this, we'll see if this is the actual peak. We just need more time, and that's kind of what I've been saying. To take any substantial risk in this market, I think you just need a little bit more time. You need confirmation because no one knows, right? No one has a crystal ball and knows how deep this pullback is going to be or this correction is going to be. You just don't know. You could look at a bunch of different things, but I know people love when people on Twitter make predictions. That's not me. I'm looking at the evidence and I'm looking, to do my analysis, and then once I see some confirmation, emerging markets. This was on my list, so to stabilize and bounce. So I would watch this. Right, we did outline a level in emerging markets that needs to hold on the weekly chart. That is 39.63. So far that's doing that's job, even though of course that didn't finish on the highs either. So turning back to a couple other things for the day, we start to look at some individual stocks. I want to save that for tomorrow's webinar. We're doing our weekly webinar we call Chart Forum, where we'll go over some charts and kind of look at the consensus. But I can continue to kind of look at some things here. Q's, like I said, fared a little bit better. 176.19 is the level there. IWM, this level of support 145, which could be where we're headed. And again, not sticking my neck out here, but I think 145, if we manage to get down into here, right, there's a virgin point of control. That could be where we end up going and maybe where we bounce. But that remains to be seen. You've got a couple percentage to go, and I think I have the percentage from the weekend newsletter. And again, this is a glimpse at the newsletter if you're not a member. I think I said about another 3.6% away. So we did go down in IWM almost a percent. So we're looking at almost 3% more to go to hit that support. So we outlined all these things, and that's the best that you could do. We talked about everything basically with the ratio charts showing risk off, risk off, risk off. A couple names that I'm watching. Workday, really surprising, by the way. Let's see where Workday is. It's about flat right now, 214. They had good numbers, but kind of just staying with the software group. Next couple days or coming weeks, I'll be watching Microsoft. Microsoft is still kind of holding in here. Notice how it's above value, so it doesn't look great. Amazon. I did start. I was looking for some levels, some pivots to be obtained today. I started a trade midday today, and again, just a small trade in this, and it is holding right. So what I said this weekend is that 1832. We did actually reclaim that, so that'll be something to watch for tomorrow. But I think there's lower levels, just like on the weekly chart that I talked about with the Qs and S&P. I think if this falls below 1772, then you've got a problem in Amazon. But that's a ways down, so I don't know if this is enough for someone to play to the short side. I could tell you right now on the short side, after a 4 week decline or 3 to 4 week decline in the indices, I'm not really looking to go that way. I'm looking to wait and see when buyers come in. And I think just position with higher cash. And, PayPal was a really nice trade that we took from Friday. And we were lucky enough I could have hit a third target in it, but I like the name. So PayPal still finished up 1.7%. And it's funny because you see a lot of names that did very well today. So it's one of those things where, again, I'm trying not to be so negative, but I just want you to kind of have a checklist and some things to follow. Because, again, if we're looking at overall this, right, where everything is getting, no, I'm sorry, I shouldn't say everything is getting sold, but the majority of things are getting sold. You want to have a healthier investment landscape than anytime they say green is selling. That has to run its course. And then, some things which I think are holding up, like this PayPal. And if you are trading some swing trades out there, in my opinion, right, I'll say it in form of myself, so I'm not giving any advice, but I have to be taking I have to be taking targets in this market. Also, can't be chasing green. You have to be selling green until that changes. And just honoring your stops. So that's it. Kind of I wouldn't say a shorter video today, but it is what it is. We can't control the price action and what bigger funds are going to do. So we just kind of have to stand prepared. Again, I'm not really looking to majorly short anything right now after a 3 or 4 week decline. Unless you're just looking to scalp to the short side, which I think is also fine. But at this point, I'm waiting for my checklist to be taken care of, and also trying to not get bruised too badly, right? I mean, right now for May, my month is down. But it's not going to be it's not a horrible month, and I'll flash that P&L at the end of the month. But I was hoping, I was up nicely this morning, that I would have a little bit of a recovery at the end of the month and possibly, come back close to flat. But I'm going to have a negative month, and that's fine. Nobody's perfect, and you live to fight for another day, because, like I said, this will not be that damaging for me, especially with the amount of cash that I've got on the sidelines right now. All right, guys, so that's it for today. Look forward to tomorrow's member webinar, chart forum, and we'll go more in detail and in depth through various different sectors and different single names, as well as maybe some international areas of the market. Have a great night, everybody. See you tomorrow.